Hey everyone, Michael of Seattle here, helping you guys become better traders today. I'm going to blow your mind today and explain why you guys might have been trading the wrong way and how to make sure you guys are staying profitable week after week after week. That way you can survive in the market and eventually leave that 9 to 5 job and just, kind of have the life you want. Working from 9 to 5 kind of sucks. I was there, I did it, and I'm happy I'm not doing it anymore. So let's go back into Finviz. We can see we're on the maps page right here. This is the home page. This is the maps page right here. It's the fourth tab over. And it's auto default. The auto default setting is 1 day performance. So it's Saturday today, but we're looking at everything that happened Friday. You can see Amazon was down 2.5%, Microsoft was down 1%, and so on. But you can also see by sector which sectors did well, which sectors did not do well. So I can see for next week, I really like what semiconductors are doing. I might actually buy some semiconductor stocks and swing it for just a week to make some profits. Now, am I expecting 20% back or 30% back? No. I'm expecting about 5% back on my investments, maybe a little bit less. But you know what? That's a pretty, it's low risk and a good enough reward where I'm going to be making money, which is all I want to do. All you want to do is have your money making you more money. Don't worry about how much at first. You want your money to be making you more money. I make most of my money trading options. But that doesn't mean I don't have my money on the sidelines also making me more money. So I have more money to pump into options, which therefore makes me more wealthy. Now, we can see banks also did well. Banks regional did well. You can see all these broken down by certain sectors. Now, we can also go by the month, so we can see how everything did in the month. You can see over the month of June, or the last 30 days, it's been fantastic. Microsoft's been rolling, Google's been rolling, Tesla's been down a little bit by actually 8%. That's quite a bit. Facebook's been down. Banks are still doing hot. But what's going to really blow your mind here is why I always tell you guys, hey, don't be afraid to just have your money in some of those big name stocks. Maybe you think Microsoft is too expensive and you can only buy one share, or maybe Amazon's too expensive, or Tesla is too expensive. I'm going to show you how all of these stocks performed for the last 365 days. And we're going to go to 1 year performance, and look at that. You bought Microsoft last year, you just would have held it, you up 30%. Apple 62%, Google 37%, Amazon 50%, Tesla 334%. Now just imagine, you kind of average these out and you get somewhere, you buy a whole bunch of stocks and your portfolio grew by 50% last year. Because all you did is buy some of these bigger name stocks and some of the more heavily traded sectors. Guess what? You would have made more money last year than you would by day trading. Because day traders, especially when you guys don't have $25,000 worth of liquidity, you guys have to, you guys have day trading limits basically, and it really kills your opportunities to make money, and it also influences your emotional system in a very, very bad way, which is why so many people that make it to $25,000 end up doing a little bit better than those that don't have that much money invested. You could have seen just by holding, you guys would have been fine. Of course, there's some there's some examples where maybe stocks you held were not doing so well. Wells Fargo had that scandal, so they're bad for the year. AT&T, who knows what's happening over there, not too good. Verizon, not too good. IBM, not too good. And Boeing, we all know what happened with Boeing. Boeing, RTX, there's a whole bunch. But you can see which ones are doing hot. So maybe, if I'm looking at this year, these stocks might do well again. Or maybe some of these energy stocks may eventually catch up, especially these utility ones and these aerospace defense ones. I'm betting heavily that Boeing is going to come back this year or next year. I have a lot of stock invested, or a lot of money invested in stock. I think that it's going to be just fine. But I bought this Boeing stock a long time ago. I bought it last March when it was crashing at its lowest point. I got a very good deal, and you know what? I got like a 20% trailing stop loss. That's how confident I am that Boeing's going to be just fine. Now, when you're looking at things like that, we can even go week to week. So maybe you guys don't want to hold a stock for a whole year. I totally understand that. Maybe that's something more in your retirement account. Maybe you guys just want to trade for a week or two, and you just want to get like a 5% or 10% back on your investment. That's totally fine. So what you're going to be looking at is you're going to be seeing how the sectors are reacting. So if we go to let's just go to 1 month performance. We can see Microsoft's been doing fine, Google's been doing fine, and we can see QCOM has actually been lagging for some reason. So we could actually just go over here and type in QCOM, look at the chart in a more basic way. We can see it broke downward out of the channel, and it's been kind of going down a little bit. We can see maybe there was some news to describe why this happened, and it looks like 4 QCOM analysts on capacity-constrained quarter outlook. So this dropped it down by 8%, almost 9%, and then it broke down out of the channel. And so what we might hope to see here, because it looks like none of the fundamentals are actually bad. Looks like it's still a great company. It was downgraded from buy to neutral. It went from $150 to $190 on a consultants talking about it, and it still looks like it has plenty of room to grow. So if you're willing to hold it for a week or two, you might actually see that it makes you some good profits. And you can see last year there was actually a lot of sale of the stock, and I believe that's because it was just so high. If you guys look right here, even with COVID going on, it was still going boom, 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 up, 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 up. And the CEOs were like, hey man, the stock has never been this high. Let's cash in and make some money off of it, which I think they did wisely. But you can see there's a lot of sell-off volume over here, and this might be a good play to catch back up with the rest of them. Tesla, on the other hand, Tesla is a much different type of stock, but you can see it's lagging in this auto manufacturer system, where you have GM, Tesla, Ford, and what was the last one? GM, Tesla, Ford, yep. And you can see how it's kind of broken out of this channel as well. I'm guessing that Tesla's going to hit 1,000 plus this year. That's my personal opinion. Just consider that, But you can see right now it's kind of hovering around the SMA 50, so the 50-day moving average. It might bounce off of that, plow through the SMA 20, and then start ripping towards $1,000, which I think it will do in the next couple months. I'm excited for Tesla, but it is a laggard, so keep that in mind. Now, the cool thing about this is you guys might have always heard the saying, buy low, sell high. Well, guess what? Everything is high right now. So it makes it much more difficult to find the stocks that are going to move up. So what you have to do is find the stocks that haven't moved up yet, which is why this page kind of exists. It kind of shows you what's been working, what has not been working. You can see drug manufacturers have not been working. You'd have to learn a little bit more about why that is, of course. But if you're willing to do like a day's worth of research on a few, like 5 or 6 stocks, you're going to find a good amount of winners that'll make you about 5 to 10% within a week or a couple weeks. Stocks move fast. Remember, let's look at the week's performance. Okay, this was a bad week, so normally it doesn't matter. But you can see the banking sector, if you would have caught on to the banking sector, because as we know, look at over the last month, banks have been doing fine. Go to the week, banks were still doing fine this week. Banks regional was still doing fine this week. Everything was going up. And you can see on this page, I can't point to it like this, but because I'll move the picture. But look how all of those charts look pretty much the same. Now, a couple of them lagged before they all went up. You just got to catch the ones that were last to go up. And that's the trick. But you can see them all right here. It gives you a nice list of what's going up and what's going down. Now, if we look at oil and energy, let's see if we can find something like this. Maybe this FANG one down here is a laggard. You can see how it's been going up, but it started to go back down. Maybe it needs a chance to go rip a little bit more, because I still think it might have more room to grow, just by looking off these basic charts. Of course, you got to do some extra due diligence, but this is the first step you guys are going to take to finding these plays where you just hold them for a week or two, but they yield about 5 to 10% back. And that's an amazing thing. 5 to 10% back every single week. Your portfolio is going to grow pretty fast if you maintain those levels. Don't try to YOLO your account and go skyrocket at 100%. People get lucky like that, but most do not. For every Facebook post, Wall Street Bets post that you see that somebody made like 100% back on their 100% back on their investment, there's going to be about like 99 people that lost money on that investment, and all those 99%, all that money went to that one person. So be very careful when you get excited about a stock and you have this experience or fear of missing out. It will hurt you in the long run, guys. So that's it for today. I hope you guys enjoyed this. If you guys have any questions whatsoever, leave them in the comments below. I'll either answer them in the comments or I will make another video to explain them to you, because I know how difficult this can be. I know I'm not the perfect teacher. I can't articulate my thoughts perfectly all the time. But I'm trying to give you guys the basics you guys need to know to make sure you mitigate the amount of mistakes you make as a new investor, and you maximize the right decisions you guys make as an investor by not trying to make too much money too fast. It doesn't work like that. Your emotions will get out of control and you will lose money. So thank you everybody else for watching. Make sure to share the video, like the video, and subscribe if you guys have not. Thanks everyone.